Another major royalty transaction took place last week, which follows Solaris securing funding for their warrants of mine. But this latest transaction is a bit different. Rather than a new royalty or stream being issued on a project, Franco-Nevada has paid up big for an existing royalty, and then leveraged their size to get some of the fine print reworked. Let's dive in. Don't miss the Rural Symposium for Natural Resource Investing happening July 7th in Boca Raton. If you can't make it in person, that's not a problem. You can get your ticket to watch live online or on demand. We'll be there with the deep dive, so if you make it out to Boca, come say hi at our booth. If you want to sign up, click on the link in the description to get your pass. Franco-Nevada has opened up their pocketbook to acquire a royalty on IAMGOLD's Cote gold mine in Ontario. But contrary to many perceptions amongst investors, this was not a new royalty or stream issued by IAMGOLD. Rather, it was an existing 7.5% gross margin royalty that Franco acquired from an unnamed third party, which we're fairly certain was owned by Treelawn Group, at least based on the Cote technical report. This isn't the first time that Franco has gone into the market and acquired existing royalties. Last year, they acquired an existing 1.8% net smelter return royalty at Newmont's Yanacocha operation in Peru. And in 2021, they grabbed 14.7% of the outstanding royalty debentures on Vale's northern and southeastern iron ore systems, which they purchased from the government of Brazil. But what is different about this transaction is that Franco used their size this go-around to have the royalty agreement replaced with a new agreement that clarifies audit and information rights. In exchange, the new arrangement also provides an option for the royalty to be bought down under certain conditions for a defined return to Franco. Okay, so let's get into the terms of the royalty itself. Rather than your standard net smelter returns royalty, this one, a gross margin royalty, is a bit different. In simple terms, a net smelter return royalty applies to the net revenue that is received from the sale of a mine's metal product, less transportation and refining costs. This gross margin royalty comparatively is subject to cash operating cost deductions while excluding all capital exploration, depreciation, and other non-cash costs. The 7.5% gross margin royalty here applies on a 100% basis to the Chester 1, 2, and 3 claims at Cote, which is exactly where all of the 5.1 million gold ounces in reserves are located, and where 99% of the 8.2 million ounces of measured and indicated and 800,000 ounces of inferred gold resources sit. It also includes coverage on two nearby targets, Clam Lake and Jackrabbit, that have further potential for resources. And given the fact that Cote is currently operating, this portfolio addition will immediately begin generating cash flow once the transaction closes. And with that, let's turn to the finances of this ordeal. This royalty as a whole is being acquired by Franco for just over $1 billion, which is to be paid out in cash. Funding for the purchase is expected to come from available capital, of which Franco has about $2 billion. What makes the transaction attractive here is that the mine is currently operating. As per IAMGOLD, Cote this year is expected to produce between 360 and 400,000 ounces of gold at cash costs between $950 and $1,100 an ounce, which is inclusive of all royalties, including this one. Implied costs of Franco's new royalty are said to be in the ballpark of $770 to $930 an ounce this year, depending on where the other costing comes in and assuming $3,200 an ounce gold. As per Franco's estimates, that means this royalty in 2025 will generate annual revenue of $67 million, half of which will be paid to Franco, given the July 1st estimated close date for the deal. Simple math as a result suggests that, all else being equal, this purchase will take about 15 and a half years to pay off. Life of mine at Cote, assuming no further discoveries, is about 18 years. We attempted to confirm an estimated payback timeline for the arrangement, but Franco's IR team didn't get back to us before the time of publishing. That being said, the mill at Cote has not yet ramped to nameplate capacity of 13 million tons per annum, but that is expected to occur by year end. Franco is also guessing that the mill will be expanded to 20 million tons a year to better align with current mining capacity. Considering Franco spent some time on the ground with IAMGOLD before signing this deal, this seems like it's a fairly likely scenario. But then there is also the Buydown provisions, which Franco agreed to as a means of getting improved clarity on the audit and information rights. The Buydown will allow IAMGOLD and their JV partner, Sumitomo, to acquire 50% of the royalty in 2 equal tranches. The first tranche, exercisable within 2 years of closing, enables the JV partners to buy an initial 25% of the royalty for an internal rate of return equal to the SOFR plus 1.1%, which is Franco's cost of borrowing. The second tranche, also equal to 25% of the royalty, can be bought for an IRR equal to 10%, provided the first option was exercised. The second tranche can be exercised within 3 years of closing. And those IRR calculations are to take into consideration the royalty payments received up to the repurchase date. In other words, as John in WLA says, it's basically a $500 million loan that Franco has given to the JV partners for some reason, given the low returns they are demanding and the high likelihood that the buyback provisions will be exercised, reducing the royalty to 3.75%. All right, so let's wrap it up. Overall, this isn't a bad deal for Franco, and a seemingly even better deal for IAMGOLD and Sumitomo, who will likely see a royalty on a major project get halved within the next couple of years. But the royalty market is tough, and if disclosures are that cherished by Franco, who is no doubt a little more careful following the events at Cobre Panama, well, then power to them. All right, everybody, thanks for watching. If there's stories you want us to cover, let us know in the comment section. We have lots of great guests coming up for me to interview on the channel. We've also got tons of earnings videos on our channel. So if you haven't checked them out and you're into mining equity analysis, check those out. Also, if there's stories you want us to cover, let me know in the comment section. All right, everybody, thanks for watching.